You're listening to Prosper in the Kingdom, the podcast where faith meets practical strategies to help you become healthy, wealthy, and wise. Join hosts John Cleaver and Wendy Lee as they share insights to equip you in your journey toward abundance, spiritually, financially, and beyond. Just a reminder, every situation is unique. The content of this podcast is for educational purposes only and should not be taken as specific financial or medical advice.
Welcome back to Prosper in the Kingdom, everybody. I'm your host, John Cleaver, with the ever awesome Wendy Lee. How are you doing today, Wendy?
Hello, doing good. Good to be here.
Fantastic, as am I. I'm glad. I'm super stoked about this topic today. And it's funny, we were talking about right before we went on the air. We have children that fit that Gen Z age group, not together, but obviously as collaborative people, parents. There's a lot of parents out there with Gen Z, and they're at that point now in their life where they're starting to think about settling down, doing the home ownership thing. And a lot of them are freaking out about, I can't afford it. I can't afford it. And I think part of that is because they grew up in a time where, their parents had those 2, 3, 4% mortgages, and now they're at 7%. So we're going to talk about the reality of it, kind of looking back over the historical time frame and, kind of looking at what's going on with Gen Z and the home ownership. The whole housing hustle. Is home ownership still possible for Gen Z? Now, I'll cut to the chase. The answer is, of course, yes. It's just a matter of putting it into place. So that's what we're going to talk about today. So, Wendy, I know I talked about this with you about a conversation I had this past weekend with my oldest son, Max. He's 25 now, and he's got a young lady who they've been together for a while, and they're talking about next steps and things like that. And home ownership has come up, and I know you've had the same thing. And kind of talk to me. Well, what are you hearing as far as home ownership from your Gen Zs?
Yeah. Well, one thing, so my oldest son's 23, again, longtime girlfriend since I think 15 or 16 years old. They both are done with college. His girlfriend actually graduated with her master's. He's secured a job promotion. He's, on his career path. She just took a job that's kind of a stepping stone for what she wants to do. And so he's like, after she's in this job for a few months, it's like I don't know, one of those like till December, and then they're going to figure out if they'll bring her on like full-time or not. And he's like, once they do that, we want to get a house, buy a house. And, the thing that I think, there's a lot to think about with that. It's not just, hey, let's go buy a house. But I owned a home. I bought my first house when I was 21. But credit is a different thing too. Because I don't know about your kids, but like my kids, they don't do credit cards. Like they've not done loans. They haven't done any of that. And so it's on, how do we build the credit? How do we save the down payment? And living where they want to live is a little bit more challenging than.
Well, and I think right there is a big component of it. And just for our listeners, her oldest has been with his girlfriend since they were both 15 or 16. She's not 15 or 16 at the current moment. So I just wanted to clarify that because she said that kind of fast. I don't want it to get weird with our listeners. So. But they're both in their 20s, they're both Gen Zs, but the question is, can you still buy a home? And the answer is, yeah. I mean, some of the challenges that Gen Z is facing, number one, skyrocketing rents and inflation. Inflation's actually come back down since our new president took office. Whether you like him or not, it doesn't matter. The numbers are the numbers. Mortgage rates have doubled since 2021. And I think that's a big piece too, is, oh my God, mortgages. Okay, so here's the reality of it. I'm a Gen X. I bought my first home when I was 26, maybe just turned 27. And you look at that, and it's one of those things that, I was 27. I was maybe even 20. So 27, 20, right in there, late 20s. And, I purchased a home. It was a new build. I had a good job at the time. It was a 3-bedroom, 2-bath, and I paid $118,000 for it. Now, house is on $118,000, and I get that, right? But technically, you can still buy homes that way. accounting for inflation over the period, that's worth about $240,000 today. So it would be like me buying a $240,000 home today. So we're going to talk some numbers and things like that. And we're going to use 300,000 as kind of a starting point. And I know, going back to what Wendy said, well, that's not my dream home. You don't get your dream home the first time out, guys. You get your starter home, right?
Yeah.
The fixer upper, the smaller place that you're going to grow into and then sell it, or smarter yet, rent it out and then go buy another one.
Yeah.
But we're going to talk about that and kind of, you look at the cost of housing, the average housing, and I looked it up before we got on here, the median home, half or higher, half or lower across the United States, is about 425,000, which is quite a bit higher than where I was at. But that's also very heavily dependent on the market you're in. Some of those are skewing out in California and those bigger metro markets and things like that. So you may have to move out a little bit. The mortgage rates, right now they're about 7%. Guess what they were when I bought my very first home? I had excellent credit, 7%. 30-year fixed was at 8%. I went with what's called a 7-1 ARM. I used to do mortgages, adjustable rate mortgages, meaning it's fixed for the first 7 years because I wasn't probably going to be there longer than 7 years. And guess what? I wasn't. I was there, I think 5.5, maybe 6, and then we grew into a bigger house. But 1 in 3 parents, or excuse me, 1 in 3 Gen Zs are still living with their parents by age 29, which, God bless my kids. They're all up and out with jobs, making it happen. I did push my kids for getting credit while they were in college. I know the gurus out there, the bald guy and the blonde lady, they talk about all credit's evil, which is total BS. But you've got to know how to use it and you've got to have it established. And this is why, right? Because you need to have that credit score. So if you haven't used Credit Karma, you haven't downloaded that app, or Credit, what's the other one? By CreditWise. Yeah, I love CreditWise. It's Capital One is what I call it. But it's a free app and it'll actually guide you on how to improve your credit. Start small, pay them off early, but use them. Don't just get them. You got to use them, but pay off the balances monthly and stuff like that. That way you're not actually paying the interest. But one of the things, the challenge is, that trap, right? They're spending 40% of their income on rent and they're not building wealth. They're building landlords. So here's the crux of it. And I get people that come to me and say, hey, Grant Cardone said, don't ever buy a house, just lease your houses and stuff like that. Well, you got to look at the big picture of what he's saying. He owns plenty of properties. He just doesn't live in one that he owns. Yeah, exactly. So your real estate is going to be your best bet on building wealth. It's one of the cornerstones of building wealth. I've had multiple properties that I've lived in. I've also done rental properties, still doing rental properties. And I can tell you right now, land, they're not making any more of it. I don't know if you guys know this or not. They're not making any more of it. So it's kind of a limited quantity. Plus, everybody always needs housing. But you've got to figure out a way, how do I get into it? And you got to buy it the right way, right? Don't pay too much for it. Don't go in and buy at the peak of the market. Buy that fixer upper, get some love, show it some love and turn around. But every time I bought the house, with the exception of one, and that was in 2008, the equity went up across the board, right? And so that's equity you can build and leverage to the next house, or hold them as rentals, whatever. But, the first thing before you just decide, like you said, I mean, what should I do before just, I want to buy a house? What should I do?
Oh, were you asking me?
Yeah, I was asking you. That's part of the co-host thing. I say some stuff, you say some stuff. So, I mean, yeah.
Well, I was gonna say something, and then I didn't want to interrupt you, and then I forgot what I was gonna say. And I was like, I should have interrupted. No, I'm just kidding. But yeah. Oh, I was gonna say So I had, when I bought my house in 2001, I think, my first house, and in 2000, I still owned it in 2008, and we were all like devastated because the value of it dropped drastically. Guess what? By the time I sold it, it had doubled in value. And if I would have held it 2 more years, it would have tripled in value. Real estate eventually always goes up. But I mean, really, you just got to have a plan and, start looking at real numbers and start, create, just like anything, right? With financial, we have to have a plan to get where we want to go.
Yep.
And so knowing your budget, I mean, I think it starts there. One thing with Mikey and Kendra, I'm proud of them because they're like, we want to wait till she's established in her job and we know what our month income is going to be, right? And typically you want to say 25% of that take home pay, right, is that target.
Not gross, not gross. She said take home, folks. Write that down. Go ahead.
Right. Is what you can afford towards a house payment. So figuring out that number, and make a plan. I think so many times we decide in our head we want to do something, and especially when we're younger, we decide we want to do something and we're like, we'll do anything to make it happen. Right. And what I remember when I was buying a house, it was like, once we decided we wanted to buy a house, it was like, how quickly can we get it done, instead of, taking the time. We were, don't judge me. Okay. But we lived in a mobile home. So I didn't have an apartment. I lived in a mobile home on 3 acres.
Nothing wrong with that. Nothing
on
wrong with
3
that.
acres, but I paid like $400 a month to live there. And I should have taken time to like really build up a down payment, because I could have, but it was like, that I want it and I want it now.
That's what folks did or had the opportunity to do in the late 1900s, folks, is, for you Gen Zers out there talking about the late 1900s, living on 3 acres at $400 a month. Times have changed a little bit, but what she's saying is very accurate. Get a plan together and talk about the budget. We talk about budget spending plans. I like to call it a spending plan because I want to spend today and have money to spend tomorrow too. But here's the reality of it, and I want you to hear me on this, and my listeners, that whether or not you own a home, you're paying a mortgage, period. Mm-hmm. When you own the home, you're paying your own mortgage. You get the benefit, you get the equity and all that stuff. You get the accumulation of wealth and whatnot. When you rent a home, you're still paying the mortgage, but you're kindly paying it for somebody else, for the privilege of living in their home, their property. So I want to be crystal clear on that. You're not skipping out on the mortgage. You're actually paying the mortgage. You just get none of the benefit. Okay. None of the tax write-offs, anything like that. So, that's one of the things. And going back to the mortgage rates, I mean, you look at that, it's like, hey, mortgage rates are what they are. You're missing out on the equity that's growing every year. Well, I'm going to wait until rates go back down to 2%. Okay. I'm going to tell you right now, I spent the majority of my early career in the mortgage banking space. Never, ever would I have ever guessed mortgages would have gone down to 3%. Ever. Not in a million years. Not in a million years. They did. So what do you think the chances of them actually going back down to that are within the next 10, 20, 30 years? Probably pretty slim. They could, and I hope they do. But here's the beauty of it. So you buy the house at 7% and then rates drop at 3%. Well, it's not like you're SOL, right? No, you get to take advantage of that. It's called a refinance. Okay. Yeah. So you can lower your mortgage payment at the time, but now you've got the house, the equity's yours. And now you're saving money and hopefully turning around and not spending that savings. You're investing it, and building towards your future wealth. But, that's one of the things. So you got to sit down and kind of, what's our plan? What's our number? What's our time frame? We're looking at 25% of our take home pay as what we want to spend on a mortgage. And you're going to have some miscellaneous expenses and stuff that come up. That's just part of it. Right. But, how do you get there? So step one, understand the numbers, know what you're getting to. Step three, look at your credit score. Okay. You want to be north of 700, right? And I know some people out there, there are places that'll do loans. I know back in the day when I was in mortgages, there were, you could go down as far as 580 on a credit score. Now you were paying for it, right? It's like, bruised credit, I think is what they called it. But you want to have your credit score 700 or higher. 680 is kind of a bare minimum, in order to be in those better rates. And then you want to work with a reputable broker looking at, hey, what are some options? You want to know what the fees are. There's sites out there like bankrate.com or whatever. Now, keep in mind, if you actually fill out the little info form, you're going to start getting blasted with solicitations. So just be aware of that. I know, right? But you can just go out there and look to see, what are the fees? You want to look at the interest rate. You want to look at the APR, the annual percentage rate. Those are different, right? And that's actually what you're really paying. You want to understand what the closing costs are and know that your seller can show a little love too and help out with some of the closing costs, so they can give you some credits back for if the property needs work. I know this house I just bought in Chattanooga. The deck was trashed. I mean, the property needed some TLC, and this is not my first home, but I love the opportunity to do a little DIY because I know I'm going to get the equity out of it, right? So it's like, oh, okay, this needs some love, right? I'm going to move into it and get a good price on it. But they gave me a credit to fix the deck of about $4,000. And so, I used that money that they had put in escrow for me. And so I didn't really have to pay for it. But, really focusing on building that credit and having a game plan and, utilize that credit under 30%. Don't go out and max stuff out, but keep it under 30% and watch what your score does. That's why I like Credit Wise. And I'm not knocking Credit Karma. I just have never used it. But Credit Wise, you can run scenarios. Well, what if I do this or what if I do that? What's it going to impact my score?
And also, Chime is a bank account that is easy for young people to use. It's all online, and they have a secured, automatically when you have an account with them, they'll open a secured credit card where you literally anything you put in checking will automatically, you can change it if you want, but will automatically move to your secure credit card. And it feels like you're just using it as a debit card, but the way it's running in the background is like credit. And so that's a way to help grow your credit score as well.
Yeah. And, a lot of places, I know my son, my youngest son, who's in college right now, he's up at University of Kentucky. His place that he rents from, they have the option that they can report to the credit bureau for you to help you with your credit scores and stuff like that. He just signed a new lease. He's going into his junior year. And so we're working on, okay, now it's time to start establishing credit. So we're probably going to opt for that this year to make sure he gets that credit and helps him build his credit score. So when he's ready to, in a few years, settle down or whatever the case may be, if he's not playing baseball, then, hey, he's going to be able to do that. But, really looking at, okay, so I'm going to work on my credit. I've decided to buy a house because I heard John and Wendy talking about I'm paying a mortgage. It's just a matter of, is it my own or somebody else's? So I want to pay my own. And then, looking at step 3, it's really, okay, now we've got to come up with a down payment. I think that's what scares the hell out of most people is I don't have the money for a down payment. Well, let's just say that, you're going to buy a $300,000 home. And I looked before we got on here, I looked at, okay, a couple of markets. One was here in Chattanooga. One was Phoenix, Arizona. Looked in Nashville, and house price. I want a 3-bedroom, $300,000. There were some nice houses out there for that. Okay, I was really surprised, especially just popping up Phoenix. I was like, man, that's I'd move into that house. That's nice, right? So you can find them. It's just a lot of young people. They get wrapped up in TikTok. I sound like an old guy now. These young people today. No, it's, a lot of Gen Z get caught up on what's going on TikTok or whatever. And a lot of that's fake. Most of that's fake. But it's like, you're not going to move into the house you lived in with your parents from day one. It's called a starter home for a reason. Okay. You get into a nice area. You probably are young, don't have kids yet. Or if you do have kids, they're infants. So they're not in school. So the school system, you want to look at that, but it's not really that important at that phase. Again, your first home is not going to be the home you're going to retire in. I'm going to tell you that right now. The average home mortgage is 5-6 years, right? And then you either move on, move up, or sell or refinance, whatever the case may be. So kind of go into that with, this is not my end game in mind. Look at it from a 5 to 7 year window.
Yeah.
Okay. And, I'm going to say this, if you're a veteran, number one, thank you for your service. Number two, take advantage of the VA loan, right? 100% financing. But for the rest of us, right? For the rest of us out there, look at FHA, 3.5% down. Okay. So if you're talking, let me pull up my handy dandy calculator here. So you're looking at a $300,000. Of course, it's not going to come up now, right? You're looking at a $300,000 house. So you're looking at 3.5%. So you're looking at, 10 grand, 10 grand for your closing costs. It may seem like a huge amount, but if you really put your mind to it, it's not. You don't have to save it up in a week. You don't have to save it up in a month. Save it up, like Wendy said, over the next year. You got 2 of you working, finding a side hustle, doing some side gigs, working some affiliate programs. And we talk about different ways to make money on this program all the time. There's a ton of ways to do it. So start looking at, all right, hey, I want to start saving that down payment, looking at FHA. You're going to need some money for closing costs, things like that. So, a $300,000 house, play it safe. I'm going to need 15 grand. That's just a good guesstimate. And look at it, talk to your parents. If your parents, hey, mom, dad, I don't know if you had planned on, leaving me anything for, for later in life when you pass on. I'd like to maybe get some of that now for a down payment if I could. And if they listen to my program and Wendy's program, they're probably going to say, well, yes, we'd listen to Prosper the King. We got some money to set aside for you. So they can actually gift you part of that as well. Now there's some parameters to that, but that's another option. So, that's a big piece of it is the down payment, but you don't need a huge amount. Okay. It's not a huge amount for an FHA loan, and it keeps it very real. And that's a $300,000 house. So, and then based on your equity, you kind of back into it. There's a lot of calculators on there. So you can use that to kind of figure out a price range and stuff like that. And then at that point, what do we do, Wendy?
Get pre-approved.
What? I can't just go start buying houses?
Oh, yeah. I've dealt with a lot of realtors, and they don't want to take you and show you a house. Some realtors won't even show you a house if you're not pre-approved.
Actually, with the new changes in the law, I don't think they can. I think you've got to have that you've got to have that pre-approval now before you can actually go see the houses. So there were some law changes this past about a year ago. Yeah. And I think that was part of it. So go ahead. Sorry.
One thing I wanted to throw in there, though, when you're looking at what you can afford monthly, I know that was step one, but it kind of ties into all of this, is when you're looking at where to buy a home, make sure you pay attention to property taxes.
Yes.
Like my family in New Jersey, I have a cousin that has a modest home, and his taxes are $13,000 per year. So you guys, that's over $1,000 a month for property taxes. So just keep that in mind. Like, pick a state that's not gonna.
Well, and here's the reality of it too. So many people are able to work virtual now. Just because you grew up in a state doesn't mean you need to live there. I know I grew up for the most part out in San Diego, California, went to college in the Midwest, fell in love with it, had family out there as well. So I stayed out in the Midwest and loved the change of seasons and all that stuff. Kicked around in Indianapolis and went from Indianapolis to Chicago and found a home that was very similar, in price point and things like that. But my taxes went from $2,400 to $9,000.
Yeah.
And this was back in 2006, 2008 timeframe. So yeah, I mean that right there, because you got to pay your taxes. Yeah. And then they also had a city tax on top of it of $164 a month. I couldn't believe it. I was so like, this is crazy. Yeah. Needless to say, I moved.
Yeah. But going back, I just wanted to throw that in there because that is important to keep in mind. But then also, with the pre-approval, talk to a loan officer. Don't just, do something online, but there's plenty of people that can refer you in your life to a good loan officer. And, like John said before already, right? Not looking for your dream home, but go, okay, what can I truly afford? Let's get pre-approved and shop within your budget.
So. Yeah. Well, and that's the thing. And a good way to start with that, folks, just to kind of, hammer this home is just do the old Ben Franklin list, right? These are the wants and these are the needs. Like I need at least a bath and a half, if not a 2-bathroom, right? Because you don't want to have fighting over the 1 bed. I've got a cabin, 3 bedrooms with 1 bath. And sometimes when I have people over or, whatever, it gets a little like, okay, I got to go, all right, boys, go outside, big oak tree on the left. But it's one of the things that, you want to, that's a need. Okay. Oh, I'd love to have a swimming pool. That's not a need. That's a want. Yeah. Right. I'd love to have 4 acres. That's not a need. That's a want. Okay. So you've got to, especially, now depending on where you're at, 4 acres may be the standard, right? If you're out in the country, that's not a big deal, in a rural area or something like that. But, and don't be afraid to move out, and check if you are a remote worker. I will tell you this, and you're moving around, that you want to talk internet wherever you look, right? Because I've been to some places I looked at that, hey, we've got internet. It's like, oh, okay, cool. Find out exactly what they've got. Are they still on dial-up? Is it you've got mail when you open it up? Because that's a little scary, right? It's trying to do Zooms and things like that. My cabin, prime example, I had a hotspot out there and I was lucky to get 2 bars. And then they got, high-speed internet, and it's a game changer. But, that's some of it, but looking at it. But again, focusing on the needs versus wants and looking at, okay, what's my budget? And keep in mind, this is where you're starting. This is not the end game. and you can decorate and do a lot of nice things to a house, pick it up, and all that equity is yours. You know, when you turn around to sell it to level up to the next house, that's how it works, folks. That's the game, right?
I had
Better yet,
friends.
go ahead.
I had
Go ahead.
friends when I was buying my first house. They were our age. And so we're talking 21, 22. And
Oh, your age back then. Your age back
my
then.
age
Okay.
back then, yeah. And so, and they bought their house, which I'll say this, my friend Corey was the husband. I went to church with him. His parents were really smart with money and really taught Corey the right things to do. Like, and they bought a house, their starter home. It was actually a condo. It wasn't even a standalone house. Bought a condo in 2 years, sold it up and got equity, and then bought a bigger house, bought a house that was by itself. Wasn't their dream home. It was a starter home, kind of small. And then in 2 years, sold it, took the equity. And you can't always do this just perfectly, but the way that they timed everything, by the time, it was like 12 years later and they had their dream home. And they weren't putting out any more money than they did for the condo because they kept rolling the equity into the new house. It's pretty cool.
That's the beauty of trading up, folks. That is the beauty of trading up. Like I said, you're paying a mortgage one way or the other. It's a matter of you're getting the benefit or your landlord is. So, and then lastly, kind of the next step is you're really working with a coach or a mentor, not just your mortgage lender, but actually sitting down with a advisor or whatever the case may be. And that's one of the beautiful things about our company, Prosper the Kingdom. I mean, we bring a lot of stuff, and I'm gonna plug us here a little bit, but we bring a lot of history. But the fact that we've got people on our team that myself, I did mortgages for 20 plus years. My clients talk to me when they go to refinances, things like that. What should I pay? What not? What fees can I avoid? And then also investment properties, rental properties, things like that. You've got resources that you can leverage for information to help guide you through this. Gen Z, you don't have to do this alone. You don't go to YouTube and think that's going to be the end all and be all, right? That YouTube is not financial advice, right? So it's one of those things that you want to sit down and look at in your situation. What can you do? Now, your lender's going to try to push you to qualify for the max you can qualify. That doesn't necessarily mean that's the max home you should buy, right? So, just things like that. Get someone who knows how to walk you through it. It may be mom and dad, right? It may be like your friends you were just talking about, Wendy, that, the parents, right? But walk you through the budgeting piece, walk you through the credit piece, walk you through the savings piece, building wealth and true long-term assets. But, in kind of closing, we went a little long today, but in kind of closing, you can do this. Okay, it's not that big of a challenge. It's the system's a little tilted right now, but it doesn't mean that God's promises don't apply to you as Gen Z. Proverbs 21:5 says, "The plans of the diligent lead to profit as surely as haste leads to poverty." You don't need perfect conditions, right? You need a plan, a coach, and faith to take action. So stop waiting on the market to change, right? Housing prices are actually starting to drop in a lot of different areas. So the pump is priming, so to speak, to make a move in the next 6 to 12 months. Inventory is going up in a lot of different markets, right? Which means that's also going to, soften the prices a little bit. Rates are not, I don't see rates going up. Maybe they're going to go down. But again, if they go down, just refinance down the road. No big deal, right? Start changing your mindset and the discipline. Have that discipline to start putting away that down payment and understand the mindset of you're paying a mortgage one way or the other. Is it yours or is it somebody else's? And get in the game early, even if it's small, starting off small to get that starter home. Anything else to add, Wendy?
No, I think it's good. Share this with your young friends or anyone that that's going to be a first-time home buyer. I know I'll be sharing this with a few people in my life that are looking to buy their first home. So
just do it, right? To use the old Nike phrase. So you can do it. Trust in God and just take a plan of action. Keep it simple. It's a lot simpler than you realize, and you can have a home and equity and start building assets. So everybody, it's been great. Do us a favor, show us some love, give us a little like or subscribe, and be sure to share this with your friends. And I'd love to see some comments on what you thought about today's episode. And like I said, if you got some value on it, give us that thumbs up. And we'll see you next week on another Prosper in the Kingdom. Bye, everybody.
Bye.
Thanks for tuning in to Prosper in the Kingdom. If this episode added value to your day, be sure to like and subscribe. And don't forget to share it with someone who could use the encouragement. For more resources, head to prosperinthekingdom.com. Let's continue building lives of purpose and abundance, one step at a time.